Hello guys, this is Vinit from Edge-Forex, and you've heard me talk about, things are getting really toppy. Everything is looking like it's making new all-time highs. Stocks are at all-time high, cryptos at all-time high, gold's very close to or within $100 of all-time high, and everything seems to be just ripping higher and higher. And why is everybody so euphoric? What are the underpinnings of the market at this point? What are things that I believe, big picture things that I would say a lot of the retail investors missing at this point? So I thought, okay, over the weekend I collected some data points, and I thought I'll share with you guys as to give you guys a different perspective of where things are. I know I've spoken about this a few times before, but I just want to put kind of everything together and look at the big picture as to why am I seeing something really drastic and dramatic right around the corner. I would say before our Q3 ends, which is before the end of September. Something is about to break. Exactly what? I don't know that. Is it going to happen 100%? I don't know that for sure. Nobody can say that for certain, because these are markets, guys. If I knew the future, I would be a billionaire. But I can see a picture and I can see different data points, and we can try and put a picture together, see if it makes sense, and if you guys agree with me or disagree with me. That's the whole point of me making these sessions or doing these sessions, that I put my case forth in front of you guys and you tell me if I am missing something or if I should be looking elsewhere or other things also. Maybe I am missing something. So I want to start a dialogue. I want to start a conversation as to how, if you agree or disagree, either way. This is an open forum. This is for Edge-Forex family. I just want to make sure we are participating in this together. So let's look at the first slide. Is all these indices are making all-time, or majority of them are making all-time high. If not, they are within 0.5% to 1% of all-time highs. Everything is going higher at the same time. So everybody thinks everything is perfect in the marketplace. Everything is priced for perfection. And when that happens, in the past, we have seen that things break. So now, next slide shows that I showed you guys the other day that 5 shares are 50% of the market. Here you will see, going back all the way to 1980, what are the weighting of the top 3 holdings of S&P 500. What I showed you earlier the other day was NASDAQ. This is going back to 1980, is the valuation in percentage of the top 3 shares in S&P 500. So the top 3 shares, NVIDIA, Microsoft, and Apple, are 21% of S&P 500. S&P 500, these are 500 companies. So the top 3 companies are 21.3% of the entire S&P 500. Guys, that has never happened before. You can see, going back in 1980, it has never happened before. And remember, when it was .com bubble, it was at 12%. Right now, it's at 21.3%. So things are even more extreme compared to .com bubble. Okay, so the next slide will show you why there is this hysteria in the marketplace. So everybody says, yes, hey, they are pricing in 150 basis point cut. And what if that doesn't happen? And I don't think it's going to happen. If anything, it'll be 25 or 50 basis points. Even that, I think, is iffy. So, but market is pricing it upwards of 150 basis points. And the companies like BlackRock, this guy, Rick Ryder, he is one of the top investment gurus out there. And he's saying that, hey, this is the best investing environment ever. So there is a lot of euphoria that is out there, which, in my opinion, when everybody is on one side of the boat tips, and then the other side takes over. So I've been coming out, guys, telling you guys that, hey, this crash is coming. I've been giving you warning for housing. I've been giving you warning about crypto. I've been warning you guys about stock market. But I just wanted to come out and kind of put everything together. Like look at the big picture, look at a lot of different numbers, and then see if it makes sense to you guys, and also to start a discussion as to where you guys think things are going. Okay, guys. So next slide shows you how bad the housing situation is. So this is the pending home sale index. That means how many contract signings are there happening, or pending contract signing. So the home has gone into the contract, but the closing has not actually happened yet. So that is this sitting at the lowest level ever. Okay, lowest level ever in the recorded history. So the housing sales are down crazy. Okay, nothing is selling unless it's a fire sale, unless it's selling 20, 30, 40% below the market price. Okay, guys. Okay, so next one I want to show you guys is this is the S&P 500 top 10 holdings. What's it? Weighting of the top 10 holdings. Okay, so the S&P 500 right now, top 10 stocks are 38.1% of the S&P holding, of S&P market cap. So out of 500, the top 10 are 38% of the entire market cap, the top 10. So if that doesn't give you a picture that only certain amount of stocks are holding the entire market up, nothing else would. Okay, guys, let's see what we've got. Next is, okay, so now the market cap's weighting. Okay, so these are the kind of extremes. So now this is the tech. Right now, everything is tech. Like everything is AI. AI is right now taking the market ahead like never before. Even so, now this what you're seeing is the black is the defensive stocks, like the blue chip stocks like Coca-Cola or Johnson & Johnson, where it's traditional businesses, where there is certain amount of dividend that's coming back. But on the other hand, the dark blue that you see here is the tech stocks. So the weightage of tech stocks in the market has been highest ever. It's bigger than .com. It's bigger than any point in the history ever. So that tells you everything is being driven or led by tech stocks. Okay, so now let's look at the price to earning ratio. Okay, so the line, the dark blue line here is the historical median. So now that's basically the average PE ratio of historically, going back starting of the Dow Jones, starting all the stock markets. Now it's sitting at, so if the light blue line is above, that means the PE ratio is above, so that is valued a lot higher, or below, that means the stocks are cheap. Right now it's sitting at 26.7. The highest it's ever been was before .com bubble at 29.3. So it's only one time before it has been higher, but it's sitting at the highest point at this point ever in the history. Now you're seeing again price to sales ratio, again highest in the history. Okay, guys, so the average is 1.6, currently is more than double. Okay, guys, so now you are looking at credit spreads. So what is the significance of credit spreads? Credit spreads are where the treasuries are the safest bets, or the safest credit ratings, and then you have junk bonds. Those are the least safest bonds. So the difference between these high risk bonds and the low risk bonds are called credit spreads. So when there is a lot of risk in the market, when there is turmoil in the market, like we had in 07-08 crash, the spreads, they expand. Again, like we go back in 01 crash, .com crash, again, the spread was 1120 basis points, here 21. Right now it's lowest. So market sees absolutely no risk in these companies at this point, which at the lowest point right now, that means the euphoria is at its highest ever. Okay, guys, so let's look at the next one. Okay, so this is price to book value. It is highest ever in the history, highest ever. Before it was in .com bubble, it was at 5.1. Right now is at 5.3x. So again, guys, everything on its own may not say that, hey, things are extreme and markets are about to crash. But no matter which matrix you look at, no matter which data point you pick up and look at, everything is pointing that, hey, we are in the uncharted territories. This has never happened before. Does that mean it can keep going on for another few weeks to few months? Yes, of course it can, but chances are that it won't. So again, trading and investing is all about timing. It's all about when you enter in the market. So right now, time is not to buy because everybody else is buying. When everybody else is buying and markets are showing you these extreme valuations, time is to get out of the markets, or at least start putting on some protection hedges. Okay, so here is the ratio, tech sector ratio versus S&P ratio. Again, it's highest ever. Again, right now everything is being led by the tech stocks, just like it was in 2001, 2000 dot-com bubble. So things are actually worse than they were in the dot-com bubble at this point. My goal is, guys, to let you guys know that these are the things that we look at and let you guys know how things are unfolding in the marketplace. And these are all the warning signs that we see, and things are not pretty. So now we look at, next one is VIX. VIX is the volatility index. Right now it's sitting at almost the lowest point ever at 15. Right now, actually, a day before yesterday, last Friday, actually got down to 14. And can it go any lower? Yes. Will it? Highly unlikely. But when it bounces higher, it goes in multipliers. So the VIX at the lowest, the market is again pricing in perfection. And let's next look at momentum of the marketplace. Now, what you're looking at is the RSI and stochastics. They have started to slope, but the prices are going high. What does that mean? Divergence. At Edge-Forex, I talk divergence, divergence, divergence all the time, and it's showing us a pure divergence taking place right here in this square, in this rectangle. And the price, as you see, is going higher, but the indicators, the momentum indicators, are falling down. So again, that's another indication that, hey, things may be reversing, or things are in process of reversing as we speak. Again, on its own, it's not that much of a big deal. But again, all the other things that I shared before, earlier in the in this presentation, things are starting to add up. The entire picture is kind of coming together. Okay, guys? All right, so here we're looking at semiconductors again. Not semiconductors, NASDAQ. Earlier was S&P 500. Now you're looking at NASDAQ. Again, the momentum is just falling off the cliff. Again, same thing with semiconductors. Is falling off the cliff, but the prices are going higher highs, but the momentum is going higher, lower highs. So the momentum is not agreeing with the price right now. Okay, so this one here is an overlap of current stock price is overlapped with on the 07-08 crash. So it's uncanny how similar the price movement was, and we are sitting right at the top, and price just before when the 08 crash happened, 09 crash happened, we are sitting at right at that moment of time. But again, on its own, maybe it's just a coincidence, but put together with everything else is giving you a much bigger picture, a much scarier picture. Okay. All right. So now, how far can things fall? So we're looking at the S&P 500. So right now it's sitting at around like 64,800 or 6,800. Let me just look at 1 second. 1 sec. NASDAQ is looking at. So let's see. SPY is at 1 second. It's not looking at. Again, it's 643. Okay. 643 is okay. And then it can easily come down to its previous support at around 600 or 560. These are the initial targets. where it could actually come down to. Let me bring that up. Yep. So that's where it actually come down to. Now let's look at NASDAQ QQQs. So that is highly overvalued at this point. It can easily come back down by 8% or even 15%, and I'm talking in the short term, like in another 3 to 4 to 5 weeks. I wouldn't be surprised if it actually comes down even below 15% mark. So now, and same thing here. Dow Jones, again, it can come down all the way down 20-25%, and I wouldn't be surprised at all. But the point again I'm trying to make is, on its own, if I see any one of these data points, anything on its own, it can be dismissed as a coincidence. It can be dismissed as, one-off event. But when you put everything together, when you look at VIX, when you look at all these different ratios, these are price to book value, when you look at credit spreads, when you look at price to sales, price to earnings, market cap weightings, all the top 10 holdings, the housing contract closing, everything is showing a picture, is painting a picture that something big is around the corner. Not everything is perfect out there, but the pricing on these markets, they are priced for perfection, especially around VIX, where everybody thinks there's nothing happening in the marketplace, everything is just perfect, and I'm telling you guys, it's anything but. So that's what I wanted to show you guys today, and I hope it made a lot of sense. And if you have any questions, do let me know, and do let me know what you guys think is going to happen. If this information is helpful to you guys at all or not, just let me know. I want to engage you guys and start a conversation and see if we can collaborate in making sense of the madness out there. All right, guys, I'll talk to you later. Thanks. Bye.